Hey guys, Ken Calcutt here with Cornerstone Financial Management, bringing you another update on the markets. Things are changing quickly, so we try to get these out often right now. Starting with some recent data that's come out, I want to just kind of point out some highlights. Our Q1 GDP numbers came out this week. We had a negative first quarter of economic growth, negative 0.3%. Not a surprise, we kind of figured it would be negative. So we are seeing economic slowdown. The question is, will we see it again in Q2? If we see it 2 quarters in a row, that's technically a recession. Now, a true recession really needs to be accompanied by rising unemployment. So we'll wait and see how it plays out. But negative first quarter GDP. Q1 earnings so far are better than expected, better than feared. So the stock market sell-off we saw last couple of months has been, a lot of that's been based on the fear that profits for major companies are going to be declining because of tariffs and all of the chaos with that. But what we're seeing so far, we're in the middle of Q1 earnings right now. The reports so far have actually been pretty solid. Last night we had reports from Meta and Microsoft. Both were really good numbers. Both stocks are really up today. Tonight we have Apple and Amazon. Those will be big numbers. If those come out good, then we're probably looking pretty good for a Q1 earnings season to end up pretty strong. Better than feared, for sure. Inflation and unemployment, 2 more things people have been watching closely. I'd say both of those have been stable. Inflation's not really moving much. It's in the mid to high 2s. That's a little higher than the Fed wants it. They really want it at 2.0. I think it's at 2.6 or 2.8. Manageable, but kind of hanging flat. Unemployment, same thing in the low 4s, 4.2, 4.3. Manageable number, not getting higher. Unemployment and GDP, those two combined, we really need to watch. If GDP stays negative and unemployment goes above 4.5, probably moving towards a recession. So those are key numbers to watch. And the market sentiment, I would say, is improving. So we're seeing the stock market rally these last couple of weeks, which honestly is a little surprising to me. I did not expect it to move this fast, but it has. Sentiment is improving. The fear is subsiding to some degree, and people are getting back into the market. So that's in a positive as well. I want to look at one more thing here. Paths going forward. Where could this go from here? We don't really know. But I wanted to list a few potential positive things that could unfold in the next few months and a few negatives. So the positives we might see, if we start seeing trade deals getting announced, that'd be a good thing. We want to see big trade deals. I'm suspecting we're going to hear a deal with India soon, probably Japan, and some European nations or the EU. That would be really good for markets to settle down and know that progress is being made in the trade talks. So talks is one thing, deals is another. We need to see some deals soon. Earnings growth, if they continue to grow positively, corporate earnings grow positively, that would be a good thing. Tax extensions are very likely. We should see that probably by summertime, the extension of the 2017 tax cuts and the deregulation that Trump's been talking about, deregulating a lot of industry, which reduces costs for businesses and allows them to be more profitable as they grow. These are all possible positive changes that are coming up. We'll see, but there's some possible negatives. If trade deals don't happen and we end up in trade wars that get extended, that's not good. The market is not going to like this. We're going to see stock market go lower if this becomes a prolonged trade war with no deals getting struck. If earnings decline, if corporate earnings are getting worse every quarter, that would not be good for the markets. And like I said, if we end up in a recession, obviously not good. So these are possible. I don't think this is the likely path. I think we will likely see these things start unfolding in the next 90 days. Not these, but I won't rule these out. These are possible. So things we're watching, and really nobody knows exactly where it goes, but these are very real possibilities here. One more thing I want to dive into real quick. Okay, so last thing I want to look at here, the typical chart that I go over with you guys. This is the S&P 500, the high point in mid-February, this low point first week of April, 6,100 down to roughly 4,850, pretty big drop off. And now we've had this rally back from 4,850 up to about 5,600 today. I honestly thought this would stall out right here around 54, 5,500. I'm surprised it keeps pushing higher these last 4 or 5 days. So that's a good indication that we aren't necessarily running into resistance at the points we thought we would. I do not expect this to just run straight back up. I just don't expect that. There's no reason for the market to do that. We're going to see it dip back down, then we're going to see it push higher. So the next couple of months are going to really tell us a lot as to what direction does the market really want to go. But the sentiment that I just mentioned improving is why we're seeing investors jump back in. People are starting to think, all right, maybe it's not going to be as bad as I thought. Redeploy capital into the markets, things are starting to go back up. It certainly could go back lower if we hear more negative consequences of trade talks or trade wars or whatever you want to call it. This certainly could get worse, but the most recent activity is definitely optimistic. So we're encouraged to see that, but I would tell everyone, if we have a big rally in the market, don't get too excited. If we have another sell-off, don't get too down. I think we're going to see movement over the next 90 days as we start to figure out what exactly is going on with these trade talks, trade deals, and the economic impact of it. So this is a pretty unique time. There's a lot of things going on in the market that we just don't know how it's going to turn out. But the markets are going to figure it out. It always does. We're going to be okay in the long run, but in the short run, this might be a period where we just have to wait it out and see how things play out. So anyway, I hope that's helpful. Just some information we wanted to share. Nothing earth-shattering to change, but just a lot of moving parts. But as always, if you need us for anything, reach out anytime. Thank you.